Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, March 18th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. S&P 500 has cleared a bullish level and now is at bullish level, so I think we may see new records actually pretty soon. Dow Jones is right behind it. NASDAQ also cleared an important resistance, and small caps are slightly behind all of the above. High yield junk debt also looks like it's bottomed, so this is really good for stocks because of high correlations between stocks and junk debt. Oil also may push higher. I'll give a trade example for an ETF, energy ETF, XLE. And dollar has eased off the 52-week high, so this should help precious metals to continue its rally. Bitcoin is sort of indecisive, so we'll look at that as well. If you're a subscriber, then stay tuned. We're going to cover all of these stocks, lots of various stocks, some gold stocks and some speculative stocks. If you're not a subscriber, consider signing up by going to MasterChartsTrading.com, click on products and sign up on the products. I have two products, trading indicators and newsletters, and I have both trading indicators and newsletters as a part of the bundle, so do sign up for that. There's also a link in the description. Very briefly, so this is the indicators that I sell, the green, blue, red and yellow lines. You can trade pretty much any security. If you have any questions how to trade, let me know. I'll answer any questions. But mostly I use them as support resistance line. And actually on this chart, we can clearly see a support resistance line. And you can see that today's price actually closed above it. So again, this is a daily chart. Daily means each candlestick is a day's worth of activity. You can trade also on 15-minute chart or whatever, any other chart. For example, here's 15-minute chart of S&P 500 futures, and I would have been entering right there if you were if I was trading it intraday. Now, if you're trading intraday, make sure it's a continuous security such as futures, forex, etc. You do not want to trade things like for example, ETF, because you can see there are gaps, and this will mess up the indicators. So make sure if you're trading intraday, meaning less than 24 hours, meaning less than 1 day's worth of activity for each candlestick, make sure you're trading a continuous security. All right, so looking at S&P 500, this is actually very good news today. Today is Friday, so we can look on Friday on a weekly chart. This is a weekly chart. So again, weekly means each candlestick is a week's worth of activity. An enormous candlestick. Look at the size of this thing. That's, you can see where we bottomed. We bottomed around this red support resistance line. We touched it 3 times, one on the week of 22nd of February, week of 7th of March, and this week, big candle. Basically, it's an outside reversal. So it looks like we are back in the bull market. I define bull market as a close above my blue support resistance line and not yet a close below the yellow line. So right now we are back in the bull market for S&P 500. We'll get to the other ones in just a second, but this is actually very important because now we can say, clearly we are no longer collapsing at the very least. So keeping an open mind again, despite the war in Ukraine, or as they call it in Russia, special operations. We're not supposed to say it, if you live in Russia. But, here in the Western world, we can still say things, and we'll call it what it is. It's a war. But despite this just really bad war, lots of civilian casualties and lots of casualties in general, we're seeing market rally. The question why doesn't really concern us. We're only going to answer the question what and how. We're going to say that currently we are in a bull market. How we're going to trade it? We're going to buy it. We're going to buy it. Basically, if you had the opportunity to buy it today, then wonderful. If not, most likely we'll see opportunities, Monday. Plus, we have three other big indices. We have the Dow Jones, the NASDAQ, and the small caps that are still catching up. So we'll have opportunities to buy the general market. Looking at Dow Jones, so we are still almost there. You can see big surge. So Dow Jones actually went into a bear market. This right there on 8th of March, in my opinion, this was already a bear market. But we can look on the weekly chart, and you can see that we actually didn't. So lately I've been kind of, I like the weekly charts more, even more than daily charts. So you can see that we kind of touched this yellow line. So yellow line to me means bear. If we closed below it, then we would say, okay, that's it. This is a bear market. But look, we kind of touched it, but didn't close below it. So I will say that we actually didn't enter a bear market for Dow Jones. And Dow Jones is, catching up. We're close again to a breakout back into the bull market. But if S&P 500 entered back in the bull market, then most likely Dow Jones will follow. Looking at NASDAQ, actually it even, sold off even harder. Also, you can see that we did close below this yellow support resistance line. So to me, this would have been bear market. Let's see what happened on the weekly chart. Weekly chart was sort of held on, although the week of 7th of March we did close below it. So this one is not as equivocal, but once again, I mostly look towards S&P 500 for the clues in the general direction of the market because of the high degree of correlation. So we can see correlations for NASDAQ and S&P 500. I don't know why it's not working, whatever. Correlations are very high between NASDAQ and S&P 500. So if one rallies, the other one will as well. But this looks really good, especially on the weekly chart. Again, this looks like an outside reversal, meaning that previous week's candle is entirely engulfed by today's week's candle. So good news for stock bulls. Russell 2000, so this one was by far the weakest of the bunch. This one actually did enter bear market right there, week of 18th of January, and we just kind of avoided it. But once again, big candle today, really strong looking candle on the weekly chart. Daily chart, same thing. We kind of bottomed here, but weekly chart is really much more clear right now. So we are looking at most likely this rally will continue, and once again we can, once Russell 2000 gets to the buy levels, we'll buy them. So yeah, good news. Junk debt also this is a weekly chart, so remember again, really large amplitude candle right there, 14th of this week's candle. Again, this is an outside reversal. Additionally, this is what I really like about this junk debt candle is that it is a hammer candlestick. So the price went down significantly. In other words, there is a shadow, the tail at the bottom of this candle, and then it rallied towards the end of the week. So this is very good news. We can say that most likely we have reversed. So this is a big, drop here on 14th of March, and then since then we reversed and went back up. So I like this action. I like the way things are going. Looks like we have indeed bottomed for stocks, and junk debt once again correlates highly with stocks, so we will take it at face value, and we will continue keeping our mind open. And keeping mind open is once again, despite the really bad news worldwide, I want to say that we're back in the bull market for S&P 500 and most likely for the rest of the stock market. Looking at oil, so oil, big run up. if you are playing oil, there's an opportunity on the weekly chart to buy it on the week of 6th of December right there for a, let me see, so 82% gain if you are able to get out at the very top. But at the very least, you were able to get in at the nice opportunity right there, 6th of December. Right this instant, oil does seem like it wants to go higher. We're kind of right around this area where the support resistance line comes in. Support resistance line is currently at 103. We're trading right around it. So let's see what happens. I would just maybe wait a few days and see if we're gonna close decisively above it. Maybe until next Friday I would wait with buying oil. I did want to give an example of a trade we did. So this is XLE energy ETF. Pretty straightforward once again. Stock XLE energy ETF. You can buy it pretty much anywhere. This is a alert that was sent on August 20th of last year, and notice that we simply just kept it open. And this is the way we trade. We look for opportunity when the stock closes above the blue line, and we just enter it. Here's the same trade on the weekly chart. Same thing. Here's the week of August 16th right there. We just buy it right there. We don't really think. We don't really care why. We don't really need to know why. We only need to know what are we trading and how we're trading it. So in this case, we were trading energy ETF XLE using my trading indicators. We buy it, set our target, and then we sit in our position and we trail higher at the blue line itself. And technically this position would have been still open till now. So that's nice 65% gain. So again, if you are a subscriber, congratulations. Moving on to gold dollar interplay. Here's dollar DXY again on the weekly chart. I kind of like the weekly chart. It's really clear. Dollar broke out here on the week of 19th of June. You know, if you could play this, this is a CFD, contract for difference. You can play it, then definitely just buy it there. You can also play it. We have Forex, like euro versus US dollar. You can also do the same thing. But the important thing is here is that dollar is appreciating, and that usually weighs on precious metals because precious metals here in the United States are sold in dollars. So looking at XAU USD, indeed gold was under pressure, but then it broke out right there, week of 8th of November. Again, I'm not really thinking too much. I'm just looking at my lines, and there's the breakout on 8th of November. It kind of pulled back and kind of played with the bearish levels, but it held on. So again, really good opportunity to buy gold week of 17th of January. This one actually was good for over 12%. Was a nice run higher. Excuse me. It was a nice run higher to almost all-time records high, almost all-time record highs. And you can see that we kind of spiked towards the records and then pulled back. So right this instant, if we look on the daily charts, we're sort of right at this support resistance line right there. So this support resistance line is at 1923. This is XAU USD. So definitely we're overextended to the upside and we pulled back. So now we're sort of unwinding this quote-unquote overbought conditions. And yeah, we might trade sideways a little bit, but then most likely we will continue higher. As of right this instant, we're still in the bull phase. So I will continue thinking about buying gold and gold miners. And finally, looking at Bitcoin. So this thing I think is in a bear market. Let's look at Bitcoin on the weekly chart. So on the weekly chart, same general principle. So they enter into a bear market right there in the week of 3rd of January. Several opportunities to sell it short. Not yet really a good move. I was still thinking that we're gonna collapse. We haven't yet collapsed, so we'll see where this goes. You know, my thinking right now is that we're bearish for Bitcoin, and you know, I would not want to be buying here yet. If it rallies to 53925, I would be thinking about buying it again. And we had really nice runs as well. So previous alerts, you can see one on the week of 9th of August, another on the week of 27th of September were quite successful. So let's wait and see what happens. I still think Bitcoin and most cryptos are in the bear market. If it rallies, I have no problem buying it. I don't really hate or love anything, you know, as far as trading it. But right this instant, I don't love Bitcoin. All right, that's pretty much it for the presentation. Head over to MasterChartsTrading.com and click on products. Again, I have 3 different bundles. One is the trading indicators. So this is the trading indicators. There's green, blue, red, and yellow lines. Again, you're very easy to trade using the indicators. You just buy and close above the blue line. You sell and close below the red line if you're trading Forex and securities of such nature. And then there is a slightly different technique for selling short stocks. But overall, if you are buying stocks, you also just buy it and close above the blue line. And you can have these indicators on TradingView.com, TradingView.com, where I'm hovering. You only need a free TradingView account, but you need to register on my site. It's $29.95 per month, and then you can have my indicators. I'll open the door for you on TradingView. If you want just a newsletter, so yes, I also send out newsletter on daily basis, and I'm going to cover all of these stocks in my weekly video for the subscribers. And so I send out alerts. I send out what I'm thinking of, you know, buying and selling. So that's a newsletter. It doesn't include the indicators, but sometimes some people just want the, you know, my ideas. Of course, the best deal is to get both indicators and newsletters. If you sign them up separately, that's $70. But if you're signing up together, that's $59.95, which is a much better deal. So do consider signing up for an ultimate bundle. Again, if you have any questions, please let me know. Thanks for watching and have another great trading week. Bye-bye.